Thanks for joining us today. As you said, my name's Stephen Twyrold. I'm the President and CEO of Excelsior Mining. We have a really exciting copper play in Arizona. Been working on it for a number of years, about 12 months away from production. So we're listed on the Toronto Stock Exchange. We're also listed on the OTCQX in New York. As a public company, we have the usual disclosures. So look, in summary, guys, we're going to be one of North America's lowest cost copper producers. We completed the feasibility study in December 2016, went online in 2017, very recent, done by M3 Engineering out of Tucson. And that demonstrated industry-leading initial and capital costs and also operating costs. Part of the reason our initial capital costs are so low is we basically pre-purchased our solvent extraction electrowinning plant in late 2015. So what makes this project so exciting for us is because we're doing what's called in situ recovery or in situ leaching. Very, very common in the uranium space. You basically drill an array of injection and recovery wells and you dissolve your product mineral where it sits underground. The photograph you see there on the top right, that's not our mine, but ours is going to look very similar to that. That's the Beverly uranium mine, and they're basically, injecting a weak acid solution in one well and recovering uranium in another. We're going to do exactly the same thing. We're going to do it for copper, and we can do it, and others can't because we have some really unique geology. So why do we think we can do it? Well, you need to be permeable. If you're going to move solutions through the rock, you need permeability. Our rock is naturally fractured. It's naturally broken. We've done a ton of test work on that and a lot of pump testing and metallurgical and geological testing. This is what some of our drill core looks like. Most drill core is solid stick core. Ours is broken and fractured. And that green copper oxide is on the fracture surface. So when the solution's moving through it, it's leaching copper. The other thing is you need to be below the water table. So, any guys who know copper oxide, that's normally an oxide cap on top of a mountain. For us, what happens is the mountain was pulled apart and dropped down into a valley, covered over by gravel, so we're below the water table and we're fractured. And so we just pick up a standard mining technique and apply it to this asset. So this is the results of the feasibility study. We did this at a US 275 copper price, dollar per pound. These are after-tax numbers, NPV 800 million US, IRR 40%, and our all-in costs, all the initial sustaining OPEX, the whole works, about $1.23 a pound for life of mine. Outstanding numbers, certainly bottom quartile. So part of that as well is our initial capex. Our initial capex is about $47–50 million. As I said, that's because we already pre-purchased our solvent extraction electrowinning plant. So I talked a little briefly about some of the value of in situ. Obviously from a mining perspective, you're not moving dirt, so your costs are extremely low. We don't have trucks, fleets, no waste removal. That gives us access to super low capital and OPEX. But in addition to that, we have a very low footprint. The environmental remediation of these projects is second to none. And so effectively, this is green mining. And that gives us a lot of benefit when we're going through permitting and community relations, which can be a challenge for mining. So I'm located in Phoenix. The whole management team is in Phoenix. Our project called Gunnison, about 2.5 hours drive on one of the major freeways. All the little blue stars on there are in situ copper projects, past in situ, soon to be developed in situ projects, hybrid in situ projects. So it's not new in the state of Arizona, but it's certainly not very well known globally. Our project has got about 5 billion pounds of copper in the ground. Over the life of the mine, about 24-year mine life, we'll recover approximately half of that. We'll produce about 2.2 billion pounds of copper, as I said, at low cost. So this is a map close-up map of our project. The big sort of green blob in the middle is the main deposit. It's about sort of 2.5 kilometres long, about 1 kilometre wide, sits below about 200 metres of gravel or overburden. The big red line is the I-10 freeway. There's not many projects where you get off at the freeway exit, you're right at our front gate. The big white line on the map is high voltage power. So we have high voltage power in place, we have freeway access in place, we have a rail line to the south. And then just recently, you can see the area that's outlined in orange to the northwest called Johnson Camp. We acquired that project for about 8.4 million US at the end of December 2015. And the main reason we acquired that is for that production facility. So you can see in the photograph there, that solvent extraction electrowinning. It exists today, it's fully permitted, it's ready to go. We simply drill our well field about 1 kilometre or so to the south, start injecting and recovering copper, gets pumped in a pipeline up to that facility, goes into that pond that you see on the right of that photograph. Pond's connected to the plant, we're now in copper production. It's that quick and that simple. So I got this map here because permitting is often a challenge. For us, we've been fortunate that we have a location where there's very low population density, despite good infrastructure, done the biodiversity surveys, done the cultural surveys, have no challenges there. So this makes it much easier to get through that process. This is where we're at today. So last month, in October, we got our state operating permit. We only need 2 permits, a state and a federal permit, both for the well field. So the state permit we got in October, it took us about 18 months to get that permit. The federal permit is presently out for public comment. That comment period will end sometime in January. Assuming that goes like the state permit, we will get our Fed permit in Q1. So once we have the Fed permit in Q1, we have a very short construction period. The plant's built, so it's a power line, a pipeline, and a well field, and then we're in production. So by the end of Q4 in 2018, next year, we'll be producing cathode. And this is sort of grade A LME cathode. Our stock price has done fairly well over the last 12 months. We've got about 160 million shares on issue. Greenstone Resources, a PE fund out of London here, is our largest shareholder. They've invested about 36 million US into us over the last 3 years in 3 separate placements. Management own about sort of 7.5%, and the rest is kind of float. Market cap around 150 million. This is a company with a market cap of 150 million US sitting on an asset that's got an NPV of 800 million at 275 copper. There's a lot of room to move on this stock. The reason we've been doing well is because we deliver on what we say. So next year, final permit, construction, production. That's the story. Thank you.